For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
In today's Saturday Sendout from the Simple Side, we've got something really exciting for you. We've seen our weekly trades surpass 12% returns year to date, while the SPY has only managed negative 5%. We're excited to share that with you, and also a couple of insider trades that we find quite interesting. You'll find it all today in the podcast, or if you're reading along on the newsletter at thesimpleside.substack.com.
There's no jargon and no time to waste. Join the Simple Side and end up in first place. Welcome to the Simple Side.
All right, welcome back if you're one of the nearly 300,000 returning subscribers, the Simple Side. We're glad to have you all. Now, if you've been around for a while, you know that we do this every time, but if you're new, every single week, I ask you to tell me what you like, dislike, want to see changed about the newsletter. And there's a link in the newsletter right here at the very beginning that says Start Survey. You want to click that so you can let me know what you want to see added, changed, or whatever to the newsletter. You can find the newsletter if you're only listening to the podcast at thesimpleside.substack.com. So go and check it out there. So far, we've made over 15 updates thanks to recommendations, including a new daily newsletter that sends daily updates on the market with fundamental and technical analysis on multiple stocks every single morning. And that's just $1 a month or $10 a year. You can join that newsletter by clicking the link in this newsletter and head over there. I just don't want to send a million emails every day to people that don't want to receive them. Decided to make that its own newsletter. Go and check that out. You can find that at thesimplesidedaily.substack.com. So head over there to check that out. One of the subscriber requests that we got from last week was that I cover baseball. And though I am a financial newsletter, and that's all I really know about, I did include all of the baseball scores for you. So whoever asked that, you're welcome. You can go and see all of the final scores from this last week. There were a couple of other requests as well, but none significant enough to mention in this part of the podcast. So keep filling out that form. Let me know what you want to see changed. And as a reminder, our prices are going to be increasing for the newsletter, and you can get grandfathered in now. So you'll pay forever, no increases, based on the current price, which is $20 a month or $200 a year. So go and get grandfathered in now if you are looking to subscribe. There's also one final slot available for our lifetime subscription. That's at $1,000, which is trading currently at a 50% discount from the normal $2,000 price point. So if you want to be the last person to get that lifetime membership offer, go and join that now. Again, there's a link in the newsletter to that, thesimpleside.substack.com to find the newsletter. All right, let's talk about the content that I have for you today. I've got some updates and developments about the newsletter, our websites, and all that good stuff. We're going to talk about portfolio returns and updates. We're going to talk about some market trends and our outlook that we see. We're going to talk weekly politician trading. We're going to talk weekly insider trading. We're going to talk about our gold report. This is something that we added on subscriber request. Then we're going to hit on our weekly article summary. This is an educational article that we send out every week. So far, we've covered covered calls and we're covering puts now. So go and check that out. And then, of course, paying subscribers have access to our weekly buy summary. They've got access to our mergers and acquisitions report, our top stock investment ideas for the week, our microcap stock picks for the week, and a list of stocks that shows you how options are treating the current upcoming earnings for companies that they'll be reporting on over the next week. All right, let's get into it all. Now, our current developments. We've got copy trading that's being released to paying subscribers. They can access that through the emails that I've been sending to them, letting them know that they can join and go and copy our portfolios. The platform we're using is called Double Finance, so go and check them out if you're looking to join. Also, I'm very close to finishing the stock and ETF scanner that has been asked for. I think this should be able to release next month and is going to cost nothing for paying subscribers to the newsletter, but it will cost for people that have not subscribed. Now, typically companies like the Motley Fool will charge over $100 per report that you pull. This is going to be violently cheaper than that. And for paying subscribers, it's going to be entirely free. Just another benefit of being a paying subscriber to the Simple Side. Our website that's going to be tracking insider trades, politician trades, and also all of my portfolios is currently in development as well. Hopefully this should be releasing next month also, so be on the lookout for that as well. All right, now let's talk about all the updates that I have for you. For the simple side, we've got a $4,000 giveaway coming up this year. We're going to be giving away $2,000 in April. That's going to be $2,000 worth of Apple stock to one lucky winner. So make sure you're on our paid subscription tier to get access to that. Alrighty, let's talk about our portfolio returns. So far, we have three main portfolios that subscribers check out, copy, follow, all of that good stuff, with the best portfolio returning a staggering 44% so far into 2025. Earlier this year, that portfolio, which is our contrarian trades portfolio, held HIMS at a 50% allocation. That stock we sold after we heard their announcement that GLP-1 sales were being restricted, and we captured 99% returns year to date on that trade. The lifetime of holding that stock was 286% returns, I believe. And also, we track our total average portfolio return, which is at 16.70% year to date. And while the market has seen brutal beginnings to the investing year, we've seen crazy outperformance from the average of all of these portfolios. And we're excited to continue to offer these and our investing insights to all of you subscribers on this platform. We use a diverse set of strategies, not just particular stocks, to create a competitive advantage against others in the markets. Understanding that the market is not optimized for a one-size-fits-all approach in investing is a huge first step to finding success as an investor. So keep following us to get access to all of those fancy special strategies that we've got built out. If you're following along the newsletter, you're going to be able to see how our weekly picks have performed against the SPY over the past, I think, 36 weeks now. So go and check that out. We've returned 29.87% over the past 36 weeks, while the SPY has only managed a 1.25% return. All right, let's talk about the markets and where we see everything going. Currently, the projected returns for the US market are 0.8% over the next year. This is a slight decrease from last week's 0.9% projection. This week in the markets, we saw 3,642 stocks with gains and 5,937 stocks with losses. The median return from this past week was negative 1.35%. And this is an absolute reversal from last week's market report, where we basically saw the inverse of these numbers. We had a positive median return and over 5,000 stocks with gains in the market and around 3,000 stocks with losses in the market. So everybody was cheering and saying the market was making its rebound, but we did not think so. Last week we stated the bad news is that there is still no turning around from the current negative directional shift we see in the market. And next week we will likely see it open lower. And that's exactly what happened. And what changed from last week's cheery attitude? Well, all the tariff news came back. This week, however, it wasn't the US government going after a particular country like Mexico or Canada. They were going after cars. The 25% tariff on vehicles that they announced not produced in the US is like taking a Rocky Balboa uppercut right after Eye of the Tiger starts playing. Regardless of whether you think that tariffs are going to be helping or hurting the economy, consumers hated the news, and consumer sentiment drives markets. And I don't blame them. I would be horrified too if I saw every news outlet in America telling me that my wallet is about to get crushed because cars are getting more expensive. But that doesn't really make sense unless you're in the market for buying a new car. Remember, we are not consumers, we're investors. What you need to do right now as an investor is turn off the TV and start watching data very closely. Follow the numbers, not the fear or the hype that the media sells you. For right now, the turnaround doesn't seem to be in the near future, but I want to remind you, it's not Armageddon that cars are going to get more expensive. In fact, it means if you own a car, the price of that car is going to increase. You're going to be increasing your asset value. We saw this exact same thing happen during COVID when the microchips meant there were less cars being built, which meant all of the used cars that were sitting on the market became worth quite a bit more. So just keep that in mind. All right, let's jump into our weekly sector analysis report. We just report on the top 3 weekly performers and the bottom 3 weekly performers every week. This week, Our top three winners were consumer defensive, up 1.11%, utilities, up 0.31%, and real estate, which was down 0.27%, but still fit in the top three performance range. As a note, all three of these companies last week were sitting on our bottom three performers list. And this will come up later after we talk about our bottom three performers this week. And this week, our bottom three performers were communication services, down 2.77%, technology, down 4.2%, and healthcare, down 4.61%. Now, communication services and technology were both top winners last week in the sector game. Now, the reason I said we'll talk about why it matters that last week the winners are on the bottom and this week the losers are on top is because Manish Prabhai, aka the Warren Buffett of India, believes that investing in what is hated and unloved is the best road to success. Quite a long time ago, he bet on coal when everybody hated coal and the Green Revolution was happening, and this performed extremely well for him. So what we've highlighted over the past couple of weeks is the fact that almost always the three worst performing sectors flip into some of the top performing sectors, and the top performing sectors seem to flip down into the worst performing sector week to week. It's crazy to watch, and we've been doing it for 3 weeks now, and we've seen at least 1 to 2 flip-flop sides every single week. Now, if you're looking for long-term or mid-term bets on things that are hated and unloved right now in the stock market, I keep track of every underperforming sector that underperforms the SPY on average year to date and is still underperforming over the past month, which gives a great chance for a rebound. Currently, the sectors that are sitting below the SPY in average returns are healthcare, industrials, consumer cyclical, and technology. All of these are down around or over 12% year to date and could see a rebound or a shift coming up in the next couple of months. All right, now we get to start talking about the fun stuff. We're going to talk about politician trading real quick. For those of you that don't know, politician trading matters a lot. In 2024, the top gaining politician was a Republican who returned 104%. This was followed closely by a Democrat, Pelosi, who returned 70.9% over the year. Now, we track 2 ETFs in ANC, and typically we talk about KRUZ here as well. However, KRUZ just had a ticker change. The ticker symbol is now GOP. So they changed from KRUZ to GOP. So when you see GOP in the newsletter, don't be worried or nervous that I just randomly switched this up. This week, Nance was down 3.58%, down 7.86% over the past month, and down 6.93% year to date. GOP is up 0.84% on the week, down 4.22% on the month, and down 2.42% year to date. For comparison, the SPY is down 4.96% year to date. Over the past 30 days, we watched 16 politicians make 94 trades with a total trade volume of 2.87 million. The current buy-sell ratio now sits at 3.33, which is up from 3 last week. This shows bullish sentiment from politicians. We've got the 5 most recent trades made by politicians in the newsletter. You can go and check those out. Again, find us at thesimpleside.substack.com. All of these 5 most recent trades were made by Marjorie Taylor Greene, so go and check what she's trading. All right, we also talk about insider trading here as well. We follow the ticker symbol SURE, which is down 0.51% this week, down 4.51% over the past month, and down 3.39% year to date. The monthly buy-sell ratio is now up to 0.34 for insiders, higher than last week's 0.31, but below the 5-year average of 0.35. This indicates slightly bearish sentiment from insiders. Now, you can go see the 5 most recent trades in the newsletter, again, thesimpleside.substack.com, but I want to highlight 2 insider buyers that we saw this week and their performance on their trades. The largest buyer from this past week was Fidelity National Financial, who bought ticker FG, which is F&G Annuities and Life. On average, Fidelity's return per trade is 13.71%, and they've made 5 trades over the past 5 years with 100% of those trades returning profit to them. FG is the stock they bought this week, and it is 99.75% of their portfolio, and they've made 1 buy and 0 sells over the past 5 years. Fidelity's purchase of FG is wildly interesting. Over the past month, the stock is down 17%, close to its 52-week low, and I think this trade provides an interesting opportunity to capture short-term rebound gains, and I believe strongly that the buy coming from Fidelity shows the stock is likely to have a rebound. This is going to be a buy opportunity for paying subscribers later on in the newsletter. The next one that we've got is something that I don't even know how to say, Celebra Capital Limited. Their average return per transaction is 132.08%, and they outperform on 95% of transactions on 20 trades. So they've outperformed 19 times out of the 20 trades that they've recently made. The ticker that they traded this week or bought was AVEA, which is 15.31% of their current portfolio, and they have 1 buy and 0 sells over the past 5 years. AVEA is up over 30% over the past week and up 101% over the past month. The stock currently sits at $6.71, and Celebra's purchase happened when the stock was priced at just $4.95. I think we missed the trade here, but paying attention to Celebra's buys or trades going forward could prove to be a very profitable idea, so pay attention to them. All right, of course, in the newsletter, we've got a gold tracker here. I'm going to skip over the technical and fundamental analysis that we put together and just hit on our prior week call out and where we see things going in the future. Because last weekend, our highlighted outlook said that we think intermittent profit taking would happen, but gold would remain above its support level at 3,000 and continue to rally amid ongoing trade tensions. And this is basically what happened. Gold indeed is trading above record highs, but stayed above 3,000, sitting at $3,085 and is well supported by inflows of cash. We did observe some short-term cautions attributable to overbought conditions and cautious positioning, ahead of key economic data. But overall, the bullish narrative from last week still holds true. We still see a longer-term uptrend for gold that does remain intact. Now, if you're wanting to get updated on how you can use puts to your portfolio's benefit, especially in this current economy where the market just seems to continue down, go and read through our educational article, which you can find by searching Educational Series number 2, Using Puts to Your Portfolio's Benefit on thesimpleside.substack.com. You can also read our quick summary in today's newsletter. Now, for those of you that don't know, paying subscribers can continue reading through this article to see all of the trades that we're going to be making next week. We give them the ticker symbol, we give them the expected return, and the key drivers for each of these trades. Of course, we hit on mergers and acquisitions news, our top investment ideas, our micro cap picks, and more for paying subscribers. If you want to see all of that, go ahead and join Paid Now. You'll get entered into a bunch of stuff and get access to our website when that releases and more as we continue to build out our platform. Again, please go and fill out that survey. Let us know what you thought about everything, and we look forward to seeing you next week with more trades.